Good afternoon, Patriot Trading Company members. Just wanted to come out here and show you guys a brief video of my EMA strategies. This is going to be more for the active traders. I will be releasing a video this week in regards to beginning trading, like your bread and butter. Now, that's not going to be your typical video, but it's just going to be my version of explaining options for everybody. But back to this video with EMAs. So I focus on the 5 minute chart if it's past 10 o'clock, and then if it's before 10 o'clock, I will look at the 1 minute charts. But you can use them, it doesn't matter. You can use them whenever you want, pretty much. Let me show you a good day for this. All right, so here's a pretty good example of how I kind of use all three of these EMAs. So you got your 8 EMA. If it's trading above your 8 EMA, that means bullish. If it's trading below your 21 EMA, that's typically going back to your resistance levels. And say if you're in a bullish trend, right, and you cross over this EMA, the red, the 50 EMA, I kind of show that as a reversal. So say if the price is going up, and then all of a sudden it crosses that, then you're going to start seeing the price go down. So on Tuesday, we saw a good example of that as it was staying pretty tight the whole time, right? You see how the EMAs stay tight and it's consolidating. And as soon as you have some kind of major break, you'll see that major price changes happens. For instance, this trade down to 1726, and then you see where the 8 EMA crosses the 21 EMA and the 50 EMA, and it, for instance, the pink line's VWAP. You're going to get a major price movement after that. So say if you entered calls, you could have looked at the trade here, right? Be like, oh man, it's hit its new low of the day, right? Or not, well, not low of the day for there, but it's definitely hit a new low. But then you see his giant candle afterwards. You see that's a bullish engulfing candle. You see this 8 EMA and it just goes up, 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 up. You stay in calls as long as the 8 EMA is going above your other EMAs, the 21 and the 50. You're golden. Now you got to also watch for bounce backs, but you know, they're pretty good indicators for here. Especially it's a lot difficult now because of the choppy market. But for instance, you'll see this. It's going down. You're like, oh, man, say you swung calls, right? You're probably feeling it. I mean, it dropped from 19 down to 17. But you see where the EMA, the lines chart, or the candles touch, and then we have all those crossovers, and look at that, we're going up again. So you can use those as kind of like to fuel your basis in the market. On Friday for Neo, start off being a little consolidated. We'll go to the 1 minute, show you a better example. So you see how they were pretty tight, still pretty tight, and then just had some massive rallies going on in SPY and everything. But as you see, as long as the 8 EMA stays up there, the price is just going to keep on going up. I know that's kind of a weird explanation, but I mean it works. And you see where it hit its high of what, 21.24 that day, and then you start seeing it consolidate, and now the 50 EMA catches up, and what do you know? The 8 EMA starts going down. The 8 EMA crosses the 21 EMA. They start staying tight, start staying tight. Tries to make a breakout, keeps them going down. Price never recovers from that. It's still condensating. Can't think right now. It's still consolidating. There we go. But yeah, we're not going to know where the price is going to break out. It really depends on the market overall strength. But we'll see a good example here. So, say on Friday, and again, we're going to use this 8 EMA strategy. Or sorry, the 821 EMA. So say you entered, you're feeling a lot of FOMO because I'm sure a lot of people probably were probably feeling FOMO on Friday. I know I was, but I entered and I made a hot 25% of my portfolio in about an hour, so I'll take that. So say, for whatever reasons you miss it or you really want to get into this trade because I mean, look, you start off at 1855 and you went to 2052. That's a lot of money right there. Well, some people will FOMO buy and they'll catch a buy right up here, right? And then what happens in the next candle? Oh no, your premium's just getting destroyed. But if you would have been using if you would have been using the EMA strategy that I'm talking about in this video, you would have been able to pick up a good purchase. So you see how the price is going up? It's starting to go down, right? The premiums. So you want to always use your EMA 21 as like I said earlier, a support or a resistance line. So if it bounces off that, you can say, wait a second, it bounced off resistance. That means it's gonna go up. Now you always want to wait for 3 confirmations, or especially on the 5-minute candle. You always want to get some confirmation instead of just blindly entering it. So you see it's having troubles breaking below the 8 EMA here, right? And now you could have played, quick puts here if you wanted to, but I like just playing one trade of the day. So you see it fell below the 8 EMA, right? It still didn't touch the 21 EMA. It's trying to, but it's failing. And then it finally touches it meets in between these guys. So it's still consolidating technically, but as soon as I would have seen that, that's bullish engulfing as it is anyway. But as soon as I see that candle, I would have probably bought calls. And then look, it broke above the 8 EMA, still did it. It needed to test again. But that's how you can use it. Now say what if you would have bought, all your calls here. Get up here. Okay, you should probably trim some, 25%, 30%. And then you start seeing it go down. And if it starts to drop below this yellow EMA, then that's when you just cut out of the play altogether. You don't want to, especially if it's like a 0 day to expire, because that's just going to eat your premiums alive. But if you see it's eating here, or if it's settling here, might be a good time to average down. If you really believe, if you have good confidence in this play and it's meeting all your criteria, which right here, I mean, you did break, you did drop below VWAP, but you were holding that EMA 21. So you were still, see all that separation? It's still a heavy bull market. So you could still hold those contracts that you had. And say if you would have held them here instead of selling them because you're using these EMAs as a trading strategy, buy the dip here, goes up, sell more if you want. It's consolidating again. You can average down again if you want. See how it just keeps on going up, and it's respecting these the EMAs, and you can just take them as a mat pretty much for where you're going in the market. Now towards the end of the day, you can start seeing, oh wow, it's breaking below the 21 EMA. So as soon as you start seeing the break below the 21 EMA, that's when your premiums are going to start being getting eaten alive. And that's when even myself, I've messed up because I'm like, oh, I'll come back. But with using the new EMA strategies that I use, it's kind of like an extra buffer saying, hey, if it drops below there, it's just going to be eating your premium, and it's going to make it that much harder to get back your call or your put. An ideal situation for me is when it breaks say it's consolidating, but all of a sudden it has a break up and it breaks above a VWAP or a key resistance level. But this is pretty much, if it breaks a support or resistance level, that's that goes towards an A+ setup. If it crosses the EMAs, that's a check mark on the list. If it breaks VWAP, it breaks the checklist. You really want to find that golden play. And I will also show you guys how I find my my plays. Just a brief one anyway. So if you have unusual whales, at the end of every day or in the morning, before the market even opens, if you go to hot chains and tickers, hide index ETF, you can go in here, scroll on the left, And pretty much, if it's anything above 100% or like 90%, I put it in like a watch list, and then I will look at it. And I'll just have it monitored. I'll have some alerts set, and 100% on the calls or puts, pretty much. So I'll just give you a brief little. Let's see here. Oh, and make sure don't play earnings. Don't do those. Don't do that. You're gonna have a bad time if you do. We'll look at. Trying to see if there's any tickers in there. Okay. Neo should be good. So you can just look in here. I go to breakdown. Honestly, you don't even have to do any of this. This is just extra information. As soon as you see that it was Neo or whatever you wanted to go in there, you can go to your chart for the morning and just do some support resistance levels that morning. So we'll say, I think I might have to do this on a bigger ticker here. What's going on with these? Okay, so we'll just say in the pre-market. Let me just do this. I'll do it on here. I'll show you guys. This is called TradingView, by the way. This is one of my main charting programs. So we'll say for tomorrow, I'll just show you guys a brief thing of what I could do. You would take the support levels. You would look at the previous day. Take the high, see if there's any dark pool print levels or anything like that, and then you pretty much just chart out the levels. And when I say that, I know it's really where you see the candles close. If they match up for other parts on the time frame. So for instance, this could be a level, or this is going to be a level. Put that there, and then right there. So that's a level. And you pretty much just want to find these spots where, because everything in the stock market, it's consolidation, and then it either breaks to the upside or breaks to the downside. So you just want to find your levels and go in and go out after that. But like I said, this is just a very basic video. The EMAs, I love it. I love the EMA strategy. You can just see the types of the breakouts that you have on this. I mean, look at that. It started off at 24.94. Say you would have bought calls on Friday at 24.92. Could have bought calls for 26 bucks for calls for 26 at 24. That would have been a couple $100 or probably 200%, 300% right there off your premium. That's a lot of money. So that's just the power, Definitely use EMAs. Now I know this is a very brief video, but please, if you have any questions or comments, I'll be more than happy to get more in depth with you. Just comment below or reach out to me on Discord, and I'll be more than happy to help you guys out. Until the next video, which will be this week, I'll catch you guys, and I hope all you guys have a great day. And let's make the market ours this week. Later.